telling me that you have a way to defer the tax situation there? Is that what you're telling me?
Yes, absolutely. Yes. And so the first one I was referring to is a 1031 exchange, which only applies to investment real estate. The second one I'm referring to is called a deferred sales trust. It works for primary homes. It works for investment real estate. It works for highly appreciated public stock. It works for private stock. It works for collectibles, artwork. It works for Bitcoin, cryptocurrency. And it's literally, I think, the best kept secret. And not only that is it's new to people, but it has a track record of thousands of closes now, right? At over 25 years, 15 times no change IRS.
My mind was blown, and it's too good to be true. It's too good to be true. My CPA would have told me about it. My commercial broker would have told me about it. No, we didn't know about it at Marcus & Millichap until 10 years ago, and now we know it.
But I'll tell you, you made me a believer when we got the wire from our mutual client who made this work. And it was a real eye-opener to see that there are ways that people can use the regulatory framework, if properly structured, to invest 1031 exchange dollars in things that you would not think were like kind to what they exited from. So it was very impressive. I got to say, you are the first one I've seen pull this off, and I'm pretty hesitant to believe in a lot of these kinds of things. So it's a major feat for me to say, wow, this actually really worked. And it was really cool.
So using the Deferred Sales Trust allowed them to hold on to those assets. I mean, obviously they're, the legal structures around them, they're not in their names, but now that chunk of money is a cow in their farm, a really nice cow that does some really amazing things tax-wise and allows them to get the income that they need in order to meet their expenses. It's going to extend the length of time that they're going to have income by a pretty wide margin.
1031 is a way to shelter your income when you sell the thing. The DST is a way to avoid the 1031 and not have to suffer the time penalty and free up your hand to negotiate at whatever time you figure is appropriate. And it allows you to sit on the sideline, or it allows you to accelerate when needed and accumulate your capital.
So I found you, just so your listeners know, on a podcast. And I'm like, wow, this guy is really leaned in. He's articulate. He's very smart. When I worked in 1031 exchanges, we didn't really talk much about DSTs. We just used them to sort of round out a 1031 exchange. And I never knew that it could be the only solution that you need for a primary resident to take, their capital gains and defer it and put it into another property. That was like mind blowing for me to understand that concept, which I learned on the podcast that you were on.
Over our career and during different tax periods, we've seen, these tax avoidance, tax minimization, offshore, all these different strategies undertaken to minimize or avoid taxes. And then I can tell you that, some of them are just not worth the trouble. And so I was skeptical. Admittedly, I was skeptical. I thought, oh yeah, here we go, another one of these, right? And then they say, no, it really is different, right? So look more closely. We looked more closely. We had, honestly, 2 years of conversations. 2 years. Now we were being due diligence at the same time that we were doing due diligence, but 2 years is a long time to be, sort of flirting with the idea of and getting to know the people and getting to really understand the transaction. Yeah, long story short, we got comfortable, although we are not tax attorneys, lawyers, or estate planning attorneys, that at least, from an investment perspective, that, it made sense to sell a highly appreciated asset, get liquid, hold that in this type of a deferred or installment sale type of instrument, and then just be in a position then to do the most important thing. I'm probably stealing your next question, which is time. They say, well, you can't make more time. You can. The Deferred Sales Trust, in a way, allows you to lengthen the investment time horizon for those assets after getting liquid, but before having to feel the tax impact. And from an investment manager's perspective, time horizon is the most important element in investing.
Why is the Deferred Sales Trust so important or so powerful right now for high net worth individuals selling assets that are highly appreciated?
So what would I say? I would say, number one, taxes aren't going down. I think we can all probably agree on that. Some might debate that, but I can tell you as an economist and a market watcher and someone who, reads policy statements from, administration, state, federal, see the amount of debt being issued. We see it all, and I think taxes aren't going down. So if anybody were waiting for a better tax environment to sell, be it stocks or a house or a collection of cars or whatever life happens to bestow on you, that strategy is probably not going to bear fruit. Yeah. Number one. Number two, I think diversification is important. It's always important. I think it's more important now. Here's what we've seen, especially in environments where there's so much liquidity and it's money sloshing around. Certain parts of the market, we're seeing them get very sort of, overstressed. Other parts, there's still a lot of opportunities out there. The real estate market is strong. Prices are up. That's good. I do always laugh sometimes in the stock market. Clients will say, well, I do want to reposition my portfolio and get more diversified. But I have a lot of, gains. I have a lot of capital gains in these stocks. And I don't want to pay all those capital gains taxes. So now this is specific to the stock market. So I want to wait for the stock prices to come down. So you've made a lot of money. And rather than pay a little bit, we could argue maybe more than you should, that's for another day, to the government. You want to wait till you give back some of your gains to the market. This is not a good strategy. So I think diversification is always important now, maybe more so than ever. Those two things I think come together most powerfully. And then I think this ability, as I said before, to get liquidity, as it turns out, as we discovered back in 2007-8 during the great financial crisis and the aftermath. We discovered it again in a very cold water splash in the face in March, April, and May of last year. Remember where we were right around this time last year, right? The wheels were coming off and liquidity was king. And we always underestimate the value of liquidity until we need it and don't have it. So here's a way to get that liquidity, get that diversification. And then the last part I mentioned before, I got ahead of myself as I sometimes do, time horizon, right? Is to then say, now we can put this money in an instrument and, for this 10-year period. And then of course it can be extended. It can basically be rolled over after that. Buy ourselves the most important part, which is control, transparency, diversification, and the ability to move that money around based on what's happening in the world, be it inflation coming back, interest rates going up, stock market going down. All these things are coming. I just don't know exactly when or in what order. But the Deferred Sales Trust allows us this insulator to do all that, maximize return before taxes, and let the investor, let the client decide when they want to realize how much of those various proceeds. It's very powerful.
Yeah, so I'd say be early and connect with us and just clarify your vision for what you want your wealth plan to be. And that's just not just your wealth, but that's your time and your energy. That's where do you think the market's at? Like, do you think it's a buyer's market, right? Do you think it's a good time to buy? Do you think it's a good time to be in debt? And if so, just keep buying real estate right now. But if you think it's not, and perhaps you want to wait on the sidelines and have some liquidity, get out of debt and wait for what we call a deal to hit you over the head, then that's why you would use the Deferred Sales Trust, regardless if you're a baby boomer or if you're a professional. But essentially, if you connect with us, we're going to help you map out a wealth plan. And as part of that wealth plan, we're going to write a line down the middle of a piece of page, and we're going to say, continue as you are with the 1031 exchange, or continue as you are with the Deferred Sales Trust, or a mixture of both. And we're looking at all of the pros and cons side by side, and then let you decide what's best for you.